This is the second installment of Sippin Tea with Kabani. It's Sunday morning at 11. I have made my tea here, guys, and I got some important updates to share with you guys. Really what we're going to talk about today is there was a pretty interesting article that came out with CMHC. So CMHC put out some predictions, and obviously it was actually, there was a lot more responses that came out with it. So what do we got here today? So I got an organic tea here today, and it is organic blueberry jam. So I will sip this along as I share some of this news with you guys, and feel free to jump in and ask any questions. And if you're watching this as it already been recorded, drop me the comments in here still, and I will get back to you guys with whatever information I possibly can. So what I really wanted to do over here is that I know sometimes what happens is that they publish these articles and it gets kind of technical and tricky, and even myself, sometimes I get confused trying to read these and trying to figure out what's going on with it. But what I wanted to do for you guys is just kind of extract the main points out of everything over here. So really, CMHC this last Tuesday came out with an article that said that, you know, they're predicting housing prices to come down in the next 12 months by 9 to 18%. So it's quite dramatic of a prediction being said 9 to 18%. They're also saying that 12% of homeowners right now have actually taken up the banks on their mortgage deferral program. And they're saying that it could possibly be as high as 20% by September. So it's pretty big numbers. If you think about it, 1/5 of all mortgage holders in Canada could possibly be on mortgage deferral programs by September. So I think it is kind of a bit of a scary situation. Even before the pandemic started, they were saying that household debt was already at an all-time high. And what I mean by an all-time high is that when they say like the debt ratio in the house, like the debt service ratio, is basically what they're saying is that every dollar that you bring in, that we're spending $1.80, and that includes on everything. So that could be from your mortgage, your car payments, your utilities, any of the debts that you guys are servicing right now. So every dollar that you're bringing in, average Canadian household was spending just under $1.80. So what they would like to see, and what I think we would probably want to see is that if you bring in $1, you want to be spending 80 cents, okay? So at least you have 20% of your stuff that's going towards some type of savings. I think right now for a majority of Canadians, most of their savings and what they're banking on in terms of retirement is going to be the house that they actually live in. So at some point they may have to actually liquidate that and move forward. But that's me just getting carried away from what the CMHC report is saying. But they're basically saying that household debt is already at a pretty high level, and we do need to get that into control. So basically, what they're saying here, and excuse me, I'm just kind of reading down this page because I don't want to miss any of the information. They're basically saying there's so what they're basing all of this on is like a higher mortgage debt, declining house prices, and increased unemployment. So these are the three factors that they're looking at. Again, that's high mortgages, they're expecting decrease in housing, and also a higher unemployment rate. I think even the Canadian Emergency Fund, I forgot it was 8 or 9 million Canadians were already claiming this fund as well. So, I mean, with a population of 37-ish million people, that's quite a bit of people that are actually already claiming this. Another thing that they mentioned in the article is that a fifth of the mortgages could be in default if the economy doesn't recover significantly. The other thing that they were said also is that they haven't actually said this. So this is something that I've been hearing from people that I've been talking to in the mortgage industry. And I don't think that they've said this yet. But there is something that they're talking about doing which could actually lower the demand in housing right now. So what they're talking about doing is that they're removing, or they want to, or I think they're going to remove the 5% down payment program. So that is a CMHC program. So if you're not aware, what ends up happening is that if you only own one property and you're going to buy another property and sell your existing property, or you don't own any real estate and you're going into the market, you can put as little as 5% down payment up until the first $500,000. So to put this all into perspective for you guys and why the concern is there is this. So if you purchase a property for $500,000, your down payment is going to be $25,000. Your mortgage insurance on this is going to be $19,000. Okay, guys. So what do you have left in this property? $6,000. Okay. So your equity position is $6,000 after paying the mortgage premium. So if they're really thinking that the housing price is going to go down so significantly, then there's going to be no equity left. So even if they have to go and sell this property, if someone defaults and they have to go sell this property, what are they actually going to end up getting for this property? They're going to be taking a hit at the same time. So that was kind of CMHC's outlook on, or what they were reporting on Tuesday. Let me sip my tea here, guys, because this is what it's about, right? I hope you guys are sipping yours too. But there was actually, this is not going to go unsaid. So there was another real estate blog that came out, and obviously they're going to come up with some information here to kind of like counteract this information that came out from CMHC. One of the main things that they were saying is that in the current marketplace, like inventory was staying stable, it was staying low, the demand is still pretty high, and they are seeing multiple offers come in on properties as well. Another thing that they were saying is that so far right now, and we talked about this last week, is that they're not seeing any significant drop in pricing. And that's true. Like, I think the most so far I've seen in the areas that I have been watching is like around 2%. And in some areas it's even less. And some areas in rare situations, they've kind of even gone up a little bit. Right now, they're saying that if the current market conditions continue the way that they're continuing, with the inventory being stable, demand staying at kind of where it's at, they think it's nuts that CMHC would even come out and say that the prices would decline by 9 to 18%. And this is assuming that the current rate of like real estate prices, everything stays stable. And the worst case that they're saying is that we could possibly see a single digit decline in pricing. So that's the worst case that they're saying. They kind of basically back this up a little bit by, there's another article that came out with Globe and Mail. So Globe and Mail obviously talked to a bunch of the banks, and the banks were basically saying this. CIBC came out and said between a 5 and 10% decline. RBC said 7% decline, and BMO was saying 5% decline. So again, with the numbers that the bank is coming out with, it doesn't really line up much, at least at the higher end of what CMHC is talking about housing prices coming down. Another thing that this article mentioned, and I thought that was very interesting, was this. And I'm going to quote this right out of their article. And it basically says, when government finances run out, or when government financials run out and the 6-month mortgage deferral period expires, people may then start listing their homes if they can't afford to keep them. So I thought that was pretty interesting. And basically these are the two articles I looked at and what I was kind of comparing it to. And it kind of comes down to this last section over here, where I want to kind of give you my thoughts on what I think is going on over here. And that last point over there was kind of interesting to me. And it's basically, they're saying if the current markets continue, then they don't see this happening. From my perspective, what I looked at was CMHC had an outlook on a further prediction of what they're comparing their data that they're looking at and saying that, they don't feel like it's going to stay the way that it is. So of course, if the current market situation stays the way that it is, if inventory is low, buyer demand is high, well, it's economics 101. Of course, the prices are going to stay stable, but we have this huge unknown right now with this pandemic going on, is where is it really going? Like, how many people are really going to be affected of this? And like they said, when government financials or when government finances run out and the mortgage deferrals stop after your 6 months, where is that going to put people? Have these people lost their jobs and they're not going to be able to maintain where they are and they're going to be put onto the market? See, my thought is that if they're going to be put onto the market at this point and they can't afford to stay where they are, another point that they mentioned is that, and I forgot about this from the real estate blog, is that they basically said that housing prices will, in order for them to come down, which makes sense, in order for them to come down, homeowners are going to have to accept ultimately a lower price for the property. But if basically your mortgage deferral payments run out and the government funding is not there anymore, and you're one of these people that are in a situation where you can't afford to keep your house, and you got to put it in the market. Well, and if you really can't afford to sell or keep your house, there's one of two things that are really going to end up happening over here. If you really can't afford it, you're going to try to sell your house, right? And almost at any number possible is what you're going to try to sell it at. And I think that's where the downward pressure could come on the market. I'm not saying this is going to happen, but if we really look at a broad range of things, this is what could possibly happen. If there is a downward pressure, you're going to have to sell and try to extract whatever you can, $50, $20, $10,000 in terms of equity out of this property. Because what is the alternative here? The alternative is that you miss a bunch of mortgage payments and they're going to foreclose on you and they're going to sell the property anyways. Likely when they go in and sell the property, you're not going to realize any kind of profit in this. So that's kind of what I see here. So the other thing I want to mention to you guys, and this is in advertisement, in any kind of thing, advertisement and marketing. See, the thing is that every company is going to paint a picture of where they want to kind of lead a consumer to, right? So CMHC is painting this picture of a dark, gloomy, storm coming on us, because I think that what they want to do is try to probably put the awareness out there and scare the heck out of people, right? So the thing is, so they don't accumulate debt, they don't make big moves and stuff like that. And maybe the real estate companies out there are going out and saying, hey, everything is great, inventory is low, people are buying. And so they want to kind of paint that type of a picture where everything is going to be all right. At the end of the day, guys, nobody really knows. And how do you really judge what is going to happen over here and what the right move is for you? I personally think that it's you got to take everything into consideration for sure. But at the end of the day, what happens is it has to be an individual and a family decision. It's going to be different for everybody. I know people out there that are still working. They may be working from home, but their pay hasn't been affected. They're not really losing out on anything except social interaction. But their finances are basically the same. And if not, they're probably a little bit better because there's a bunch of places they probably would have went and they're not going. So there are people out there in that situation. So some stuff I wanted to mention is this. Like, look, if you have a new construction home that you have committed to purchasing, okay, and you have a closing coming up, I don't know, 6 months, a year, maybe a little bit more than a year, and you're really concerned about where this market is going, and you're basically really tight on being able to purchase the property that you've already committed to or closing on the property that you've committed to. This is a situation where you might want to risk out the positive, weigh out the positive and negatives of it and say, hey, look, the market right now, honestly, is turning. So for the most part, if a house right now today is put on the market, it's priced correctly, looks nice, there is a demand out there for people to come out and purchase this property. There are things that are selling pretty quickly and in multiple offers. I'm not saying it's across the board, but it definitely is happening. So maybe if you have committed to pre-construction, this might be something that you may want to consider doing. Weigh out the positive negatives. If I sell my property right now, where am I going to go? Where's my family going to be? Finding a short-term rental could possibly be difficult. If you only have a 6-month or 8-month gap, you may have to commit to a full 1-year lease. Or do you go into an Airbnb? Do you trust being in an Airbnb? These are the kind of things that I think you have to sort out. The other thing you don't want to forget about is that are you going to have a mortgage penalty? If you're on a fixed rate mortgage right now, are you going to have a huge penalty in order to break this mortgage that you have? Maybe you were going to port your mortgage over to the new property and you weren't going to have any kind of penalty. I'm not 100% sure, but I think it's about 6 months, possibly 3 months, that a bank would actually hold on to your mortgage. Well, they would kind of hold it. If you sold your house, they would take the penalty out, but when you put the mortgage back on your new property, they would basically refund you your penalty. So these are things that you guys have to consider. But if you're really feeling nervous about it, you've thought about it, it may not be a bad option for somebody that's already committed to pre-construction. Still, the catch is that maybe nothing happens. Maybe prices continue to go up. Maybe in 6 months, you might have got a little bit more money for your property. I don't know. Not a lot of people know what's going to happen over here right now. The other kind of seller I end up running across or buyer I end up running across is this. Sometimes they want to move into a different area or they want a larger home. So if you want to move into a different area and you want a larger home, I would really say that it depends on what your situation is right now. So is it a dire need and urgency that you need to make this type of a move, right? The other thing, as I mentioned before, is that you have to think about what your income looks like right now. Has it changed after this pandemic has started? Like, has your income gone down? What type of a job do you have? Like, are you in, some kind of a sales job where, you know, it could be risky? Are you in the restaurant business where it could be risky? Like, what type of job do you have? What type of outlook do you see your career having, like based on what's going on in the world right now? Now, if you feel 100% comfortable and you're like, hey, like nothing is going to change in my financial situation because of the career that I'm in, then this could be a good opportunity for you. What I would just suggest is that you trade in the same market. By that, what I mean is this. We are undoubtedly in an uncertain time right now. So what I would suggest to anybody that would want to kind of make this move right now, I would strongly recommend that you actually put your house on the market. I'd say, let's put your house on the market right now. Let's set it up, make sure that everything looks nice, and start to gauge the traffic that we're getting through your property. So by that, what we can do is that we can see how many people are interested in the property. And once we get feedback on the property, we can see if people are actually going to come forward and make an offer. Once we start getting indication of this is going to be happening, and prior to that, everybody is looking online anyways, you should have a somewhat of a short list of homes that you are interested in purchasing if your home is to sell, and then be prepared to actually go out and buy something almost right away. The other thing also when we're doing something like this is that you want to be very comfortable of who you're selling your home to, okay? So pre-qualifying the buyer right now, I would say, is incredibly important. If they've sold their property, you want to make sure that they, you know, you want to get the agent or me, what I would always do is I would go in, make sure when they purchase the property, when they've sold it, and kind of get an idea of, you know, how much equity they have. I also want to try to secure a pretty large deposit on this, because you want to try to eliminate all the risks that you will probably have in making a transaction like this. So overall, what I would say is that you want to trade in the same market. You know, in 2017, when the market did turn, we did see people that were, you know, in a real hype where they did go out and they purchased property first, because that's the way things were going. Like, if a house hit the market, you'd have to buy it right away. You wouldn't have to think. I was actually chasing people around with my iPad and saying, you got to sign this right now if you want to buy this house, before we even leave the house. So there are people that got caught up in that situation where they purchased real estate and then they were going to come back and say, hey, the market is turning so quickly, I'm going to go back and sell my property after I buy a place because I make sure I get what I want. But in that short period of time, it was like a light switch, turn on and off, and it basically turned off. And the people that committed to purchasing these homes, they pretty much got a lot less than what they were expecting to get for their property. Maybe not a lot less, but it was less, and it took a lot more longer, caused a lot more stress. So I'd say if you're in this market, you pretty much do want to make sure you're getting a very good idea of what's going on with your existing property. Keep an eye on properties that you are interested in purchasing in. And I would really recommend that at this point right now that you would actually sell or be very close to selling your property to a qualified buyer before you actually do pull a trigger on purchasing a new property. That's kind of my 2 cents of it. I'm kind of caught up personally in a similar kind of situation, and I don't mind sharing it with you guys. I mean, I feel like I have a really nice home right now, but you know, my ambitions are big and my future family plans are changing all the time. So, you know, one of my goals is that I want to move my mom in with me in the future. So, you know, and as our parents and elderly, they do, you know, age, you know, I really want to have an elevator in the house, because I don't want, you know, my mom or my parents to be confined to like one area of the home. I don't think that's really fair. So I do want to have an elevator in there so they can go up and down and, you know, they can be as normal as possible as they age. So I'm in a debate right now, and I work with an awesome custom home builder, and I'm debating right now that should I, you know, start signing paperwork for them to build something for me. And this is something that I just have to evaluate for myself to see where it's going to go and how I feel about it. But I don't feel too certain about it right now. I got to be honest. So, you know, I think I have a great home. I'd be able to sell it, but I also have to think about other things as well. Like, this house will take a year and a half to build. Where am I going to go? Where am I going to stay? Where are all my possessions going to go? So it is a very complicated thing. And, you know, ultimately right now, I haven't really made a decision on which way I want to go about it, but it's still something I'm considering, and I'm not sure which way it's going to go. And the other thing I can share with you guys, and it is related to housing, but not so much. What I've always kind of done, and I don't mind sharing this in a future update, is I've always tried to be very tight with what I've earned and what I'm actually putting out there. A lot of times what I've been doing is I really try my best to spend less than I actually earn, and I make commitments to myself to try to tie myself up into investments that will actually force myself to save. So I can go on about this forever. It would be a whole new blog, but what I can say is in a nutshell is this. it's probably tight for people to be able to save money. One of the tricks I've learned early on is basically try to take money out after you get paid. Like right after you get paid, set up an automatic withdrawal from your account into a savings account. You know, I don't care right now if it's even $5. What you want to do is you just want to get into the habit. You want to be in a habit of being able to save money. So I learned this trick from Atomic Habit. It's an awesome book. If you guys haven't checked it out, you really should. And it's small triggers and small steps, okay? So even I would say is even, I know it sounds petty, but even if you can set up your account to save $5 bi-weekly after you get paid, I'm very sure, I'm confident you're not gonna miss the $5, okay? So just put that over there. Once you start to see that grow a little bit, you're gonna see that, hey, okay, it's not that hard. And what you're gonna be able to hopefully do is you're gonna increase it to $10, then to $20, to $40. And that's the idea. What you wanna do is it may not seem like a lot of money, but what you really wanna do is you wanna, sorry, my battery's about to die here. That's not stupid of me. But what you wanna do is you wanna be able to, start the habit of savings. That's what I would say. It might start off small, but it would all lead to a bigger picture. All right, guys. So this was kind of my Sippin Tea with Kabani. I got to figure out how to pace myself a little bit so I can drink my tea at the same time. But this is what I got for you guys. Any questions that you guys have at all, feel free to reach out to me. My number is very easy to find online. I'm not going to repeat it out for you. Just Google my name. You're going to find my direct number. You can email me, send me a DM. However, get a hold of me. If there's anything I can do to help you guys out, I'd be more than happy to. Hope you guys enjoy your Sunday. Have an awesome week. Talk to you guys soon. Take care.
Sell it, sell it, sell it, sell it, sell it, sell it, sold. Sell it, sell it, sell it, sell it, sold. Sell it, sell it, sell it, sell it, sell it, sold. Sell it, sell it, sell it, sell it, sold.